guys, welcome back to Aditya Financial Insight and NISM series 8 Equity Derivative चैप्टर नंबर 6 ट्रेडिंग मैकनिंग पार्ट 2 में आपका स्वागत है। तो हम यहाँ से यानी 6.4 एडजस्टमेंट फॉर कॉर्पोरेट एक्शन पर हम शुरुआत करेंगे गाइस, जो कि पिछले लेक्चर में इसके पहले हमने पढ़ा था। तो हम देखते हैं एडजस्टमेंट ऑफ कॉर्पोरेट एक्शन फॉर द स्टॉक ऑप्शन would we follow। तो क्या क्या फॉलो कर सकता है। The basic of any adjustment for the corporate action shall be such that value of the position of the market participants on come each date for the corporation action shall continue to remain same as far as possible. This will facilitate in retaining the relative status of the position between the money, at the money and out of the money. This will also address issues related to the exercise and assignment. Adjustment shall mean modification to position and contract specification as listed below, such that the basic premises of adjustment laid down have been satisfied. Strike price, position, and market lot multiple. An adjustment of the corporate action shall be carried out on the last day on which a security is traded, come basis in the underlying cash market after the close of trading hour. The adjustment shall be carried out on any or all of the above based on the nature of the corporate action. The adjustment of the corporate action shall be carried out on all open positions. The corporate action may be broadly classified under the stock benefit and cash benefit, bonus, rights, merger, demerger, and amalgamation. जिसमें कि देख सकते हैं ये कॉर्पोरेट एक्शन इस तरह का होता है। बोनस, राइट इशू, मर्जर, डिमर्जन एंड एमैग्लमेशन। हम नीचे देखते हैं आगे क्या है। स्प्लिट है, कंसोलिडेशन है, ईव ऑफ है, वारंट्स है, सिक्योर प्रीमियम है एंड एक्स्ट्राऑर्डिनरी डिविडेंड। ये इतना तरह का कॉर्पोरेट एक्शन देखने को मिलता है गाइस। तो फॉलोइंग इलोबरेट एडजस्टमेंट फॉर बोनस, स्टॉक स्प्लिट, कंसोलिडेशन एंड एक्स्ट्राऑर्डिनरी डिविडेंड हम इसमें डिस्कशन करेंगे आगे बारी बारी से। तो बोनस, स्टॉक स्प्लिट एंड कंसोलिडेशन देखते हैं। स्ट्राइक प्राइस, द न्यू स्ट्राइक प्राइस शैल बी अराइव एट बाय द डिवाइडिंग all the strike price by the adjustment of same as factor under market lot and multiplier. The new market lot multiplier shall be arrived at by the multiplying or all market lot by the adjustment factor as under position क्या होता है। The new position shall be arrived at by multiplying all position by the adjustment factor as under. Adjustment factor for bonus, stock split, consolidation is arrived at follow। बोनस में देखते हैं रेशियो एच टू बी, एडजस्टमेंट फैक्टर ए प्लस बी बाई बी, स्टॉक स्प्लिट एंड कंसोलिडेशन रेशियो एच टू बी, एडजस्टमेंट फैक्टर ए बाई बी। ठीक, राइट इशू में आ जाते हैं। नंबर ऑफ एग्जिस्टिंग से ए है, राइट इंटेलमेंट राइट टू सब्सक्राइब बी है, टोटल इंटेलमेंट ए प्लस बी एंड अंडरलाइंग क्लोज प्राइस ऑन द लास्ट कम डेट पी, issue price of the rights S and benefit per share E, benefit per right entitlement P minus S, benefit per share is equal to P minus S by A plus B। P minus S यानी issue price minus benefit by P minus S by A plus B। ये हो गया आपका नंबर ऑफ एग्जिस्टिंग्स है, अब भी हो गया राइट इंटरमेंट। वही बेनिफिट पर शेयर इज इक्वल टू P minus S by A plus B। एडजस्टमेंट फैक्टर P minus E by P। एडजस्टमेंट फैक्टर आपका इस तरह निकलेगा, अंडरलाइन क्लोज प्राइस माइनस बेनिफिट पर शेयर बाय P। तो ये हो गया एडजस्टमेंट फैक्टर गाइस। डिविडेंड if any declared by the company along with the rights shall be adjustment as per the prevailing dividend adjustment policy in F&O segment. Every methodology may result in fraction due to the corporate action hour ratio 3:7. Between a view minimizing fraction settlement following the methodology is proposed to be adopted. Compute value of position before adjustment. Compute value of position taking into account the exact adjustment factor carried out rounding of a strike price and market law. Computed value of the position based on the revised strike price and market law The difference between A and D above, if any, shall be decided in the manner laid down by the group by the adjusting price or market law so that no force close to open position in mandate. अब डिविडेंड पर हम डिस्कस करते हैं गाइस, तो डिविडेंड क्या होता है? डिविडेंड which are below 2% of the market value underlying the stock would be deemed to be ordinary dividends, and no adjustment in the strike price would be made for the ordinary dividend. For extraordinary dividend above 2% of the market value of the underlying stock, a strike price would be adjusted. For extraordinary dividend above 2% of the market value of the underlying security, all position in existing strike price shall continue to exist in corresponding new adjusted strike price for the respective option contract. All open positions shall be carried forward at the daily settlement price less dividend amount for the respective future contract. To decide whether the dividend is extraordinary at or above 2% of the market price of the underlying stock, the market price would mean the closing price of the stock on day previous to the date on which announcement of the dividend is made by the company after the meeting board of the director. However, in cases where the announcement of dividend is made after the close of market hours, same day closing price would be taken as the market price. Further, if the shareholder of the company AGM changes the rate of dividend declared by the board of directors, then they decide whether the dividend in extraordinary note would be based on the rate of dividend communicated to exchange after the AGM and closing price of the stock on the day previous to the date of AGM. In case of declaration extraordinary dividend by any company, the total dividend amount specified and ordinary would be reduced from all the strike price of the position contract on that stock. The revised strike price would be applicable from the ex-dividend date specified by exchange. Merger and demerger. On announcement of the record date for the merger and demerger, the last come date for merger and demerger would be determined by the exchange clearing corporation. The date of expiration of all contract in the underlying which shall cease to exist subsequent to merger and demerger shall be last come date which shall be informed to the member. Pursuant to the announcement of the record date, no fresh month contract on the future and option would be introduced in the underlying which shall cease to exist subsequent and merger and demerger. Unexpired contract in the underlying which shall cease to exist subsequent to merger and demerger outstanding as on last come date shall be compulsorily settled at the settlement price. The settlement price shall be last available closing price such underlying in the capital market segment of the exchange on the last date. द ट्रेडिंग कॉस्ट, हम ट्रेडिंग कॉस्ट पर डिस्कशन करेंगे गाइस। द ट्रेडिंग कॉस्ट देख सकते हैं, a participant in the equity derivative market incur different trading costs which can be broadly classified into user charges, stationery charge and impact cost. User charge. Brokerage is the commission charged by a broker who places the order for the client. Brokerage is usually lower for the intraday trade. Rates of brokerage differ widely according to the additional service offered by the broker. Just as a broker charges brokerage from their client, a stock exchange also collects transaction charge from the broker who are a member of exchange. Statutory charge. This includes security transaction (STT), goods service GST and stamp duty, SEBI turnover fee and applicable GST on it. The STT हो गया सिक्योरिटी ट्रांजैक्शन टैक्स रेट करंटली applicable on equity derivatives same as by, जैसे कि देखते हैं सेल ऑफ एन ऑप्शन सिक्योरिटी 0.10% होता है जो कि सेल ऑन द ऑप्शन प्रीमियम, सेल ऑन ऑप्शन सिक्योरिटी where the option is exercised 0.12% purchase on the settlement price, sale of a future in security 0.02%, seller on the price at which further is traded ट्रांजैक्शन चार्ज इस प्रकार होता है। ट्रांजैक्शन चार्ज आर अ fee levied on the trade conducted through a stock exchange. The exchange has a specified structure for these charges, which vary depending on the types of trade, such as equity, future, and option. Transaction charge are levied on both buy and sell sides transaction. For the option, they are charged on the premium on should always refer to respective exchange notification circular a certain prevalent transaction charge. IPFT charge. IPFT Investor Protection Fund Trust is created by the stock exchange to make investor claim where the defaulter trading member assets are not enough to cover investor claim. This fund also focuses on promoting investor education, awareness, research on many visit respective exchange websites ascertain in the current IPFT charge as the same is subject to change. The IPFT charge for NSE are followed. NSE equity and NSE future 10 रुपया 10 रुपये 10 per crore trade value plus 18% GST. NSE equity option 50 रुपये per crore प्रीमियम वैल्यू NSE इक्विटी ऑप्शन प्लस 18% GST। तो ये आपका इस तरह का goods and services GST is charged at 18% on the brokerage plus transaction charge. Both STT and GST are collected by the central government. Stamp duty is charged 0.02% यानी 200 रुपया पर करोड़ for the buyer equity future and 0.03 यानी 300 रुपया पर करोड़ for the buyer equity option. SEBI turnover fee are charged 10 रुपया पर करोड़ plus applicable GST. Bid-ask spread impact cost. These are not actually paid by the market participant. These costs arise because of the market imperfection of the lack of liquidity. The result is that buyer who place order to buy at the market price instead of placing limit order end up paying higher price. Similarly, seller who place order to sell at the market price instead of limited order receive a lower price. Consider an order look with the following buy and sell ऑप्शन इन स्टॉक जैसे देख सकते हैं गाइस क्वांटिटी 19,950 है बीट 16.60 है आस्क बीट 16 रुपया 60 पैसा पर और 16 रुपया 80 पैसा पर उसको मांगा गया तो क्वांटिटी 2850 का वही 5,700 क्वांटिटी है और 16 रुपया 55 पैसा पर बीड है जो कि 16 रुपया 85 पैसा पर तो 5,700 क्वांटिटी ये हो जाएगा ठीक समझ सकते हैं इस मतलब बीड आस्किंग से बहुत कम है तो पूरा हो जाएगा वही आप देख लेते हैं कि 11,400 क्वांटिटी है जो कि 16 रुपये 50 पैसा पर बीड है और 16 रुपये 90 पैसा पर मिला यानी मात्र 2850 की क्वांटिटी हो पाएगा वहीं 5700 क्वांटिटी है जो 16 रुपये 45 पैसा पर बीड है और 16 रुपये 95 पैसा है तो आपको पूरा क्वांटिटी मिल जाएगा वहीं 2850 क्वांटिटी है जो कि 16 रुपये 40 पैसा पर है और आस्किंग है 17 का तो ज़्यादा नहीं मिल पाएगा क्योंकि 8,550 पर ही क्वांटिटी है देख सकते हैं दोनों तरफ का क्वांटिटी आस्किंग बीडिंग है जिसको मैच होगा उतना पर आपको दोनों साइड से सेटलमेंट हो जाएगा द बेस्ट बाय प्राइस 16 रुपये 60 पैसा while the best selling price 16 रुपये 80 पैसा if the some investor is in hurry to buy the option he will have to buy at the ask price 16 rupees 80 paisa. Similarly, an investor who wants to immediately sell an option square of his long position will receive bid price 16 rupees 80 paisa. An investor who buy option premium 16 rupees 80 paisa and immediately square of the position 16 rupees 80 paisa would incur loss of 0.02 per lot. This gap between the bid and ask price known as the bid risk spread. Bid ask spread tends to be larger for illiquid stocks which have lesser participants by the trader. Impact cost is a major cost incurred due to the bid-ask spread. Again, the later larger bid-ask spread, larger would be the impact cost. Example, cost of trade. देख सकते हैं. Suppose the trader take a short position of one lot index future at the future price of the 70,500. The lot size is 50, hence the contract value 1:50 is to 1750 8,75,000 Various costs associated with the trader is also brokerage चार्ज 0.03% है, देख सकते हैं 262 का। STT सिक्योरिटी ट्रांजैक्शन चार्ज, एक्सचेंज फी 0.02%, सेबी चार्ज 10 रुपया पर करोड़ एंड 0.08, IPFT 10 रुपया पर करोड़, GST 18%, तो देख सकते 50 रुपया 72 पैसा। टोटल ट्रेडिंग कॉस्ट हो गया 507 रुपया। अगर 8,75,000 का आप टोटल कंट्रैक्ट वैल्यू करते हैं तो आपको 500 रुपया चार्ज होगा, ऑल टाइम चार्ज। Note that the brokerage charge 0.03 are only illustrative. Most brokers today charge broker at a flat rate per order. A stamp duty is not considered in the above example as the is only charged on the buy sides of the transaction. एल्गोरिदमिक ट्रेडिंग क्या है, जो आजकल बहुत ही फेमस है गाइस। Algorithmic trading is a process of execution order utilizing automated and pre-programmed trading instructions to account for the various such price, timing, and volume. An algorithm is a set of directions for the solving a problem. It is basically a mathematical model development program and is fed into a computer. The model considers the changing market conditions such as the security price, trade volume, time of the day, and dynamically place buy and sell in the market. The biggest advantage of algorithmic trading is that because the placing buy-sell order is automatic and computer-driven, individual trades emotion are not allowed to affect his or her trading decision. Another huge advantage is that algorithmic trading reduces the overall time taken for the order execution because the computers can place order at the higher speed than human operation. Sitting at the trading terminal, high frequency trading is an subset of long trading which allows a trader to make tens of thousands trades per second. Algo trading is mainly used by the institutional investor and large brokers to cut down their trading cost. It is observed that many unregulated platforms have started offering algorithmic trading service strategy to investors for automated execution. Their trade in many cases such as platform aggressively market the algo strategy, promoting high return on investment to investors adopting such a strategy to prevent such mis-selling and to protect the interest of investors. SEBI has cautioned investors against dealing with such an unregulated platform. It has also directed brokers offering also trading service not to refer to the past expected return from such algo strategy, not to association with any algo platform that refers to the past of expected return from any algo strategy. SEBI has introduced measures to strengthen control around algo trading with the broker and exchange for the safer participants of the retail investing in algo trading. The following regulatory framework are being proposed with effect from 1 August 2025. Application programming, a set of rules and protocols that allow different software programming applications to communicate, exchange data for each other. A static IP, a fixed IP address approved by the broker to avoid unauthorized access. Open authentication, a secure authorization framework that allows third-party applications to access user data without requiring users to share their login credentials and other sensitive information. Two-factor authentication. Any user who accesses API should have two-layer of verification, password and OTP. Algo ID exchange will assign a unique identifier to each registered algo for the purpose of surveillance. Kill switch, an emergency function and the last level of the defense against any algorithmic function malfunction is expected to automatically trigger a halt on trading activity based on the predefined condition. तो गाइस ये सभी 4 फरवरी 2025 को सर्कुलर दिया गया था, जो कि आप देख सकते हैं 1 अगस्त से लागू हो गया है। देख सकते हैं पार्टिकुलर डिस्क्रिप्शन, ऑर्डर पर सेकेंड, low frequency less 10 OPS, registration not required, generic algo ID, high frequency greater than 10 OPS, registration mandatory by the broker, unique exchange ID, usability allowed to share within family spouse, dependent children, and dependent parent only with the 2F verification. API access, open API not allowed. Mapped broker approved, static IP mapped by the API key. Multiple API key allowed. Segregate registration of unregistered algo. Security unauthorized permanently only mandatory to a function. Broker roles deal with the implant algo providers only the due diligence before the implement responsibility of surveillance. Broker shall be solely responsible for the handling investor grievance related to the algo trading and monitoring API for prohibited activities. SEBI and exchange will not entertain any complaint. Characterize of algo parameter. Logic disclosure disclosed to the user, not known to the user. Replicability replicable by the user, not replicable by the user. ठीक. Transparency automated trading strategy system that execute order based on fully transparent algorithm. User cannot see the internal working and rationale of the algo. User understanding decision-making process and underlying rules are accessible and understandable to user, not accessible to user. Registration not required to register. Algo provider must register as a research analyst. एल्गो ट्रेडर वही हो सकते हैं जो कि रिसर्च एनालिस्ट हो सकते हैं. ये कुछ इस तरह का है. रिसर्च रिपोर्ट नॉट मैंडेटरी. मेंटेन रिसर्च रिपोर्ट करना. each algo. Logic change not treated to new algo. Each changes should be registered in new algo and confirm the exchange that report है ये maintain. देख सकते हैं. Tracking future option data. Prior to the surge in the popularity, internet trading daily newspaper were a cheap source of information regarding a spot and derivative price. The price of both a spot and future market can now be tracked real-time basis on the website of both exchange as well as the online trading platform. Various brokers, in addition to prices, following the details can be tracked: market date, this given trade date, symbol this given the underlying the stock, Nifty SEC instrument, this given contact description on the various instruments available in the derivative segment, future stake and option exchange. Expiry date on the contract. Option type, this gives the type of option contract. EC call European, PE put. ECA call America, PA put American. Corporate action level, this is a corporate action flag. This flag change when there is a corporate action on a contract which could either be symbol change or dividend announcement company. Strike price, this given a strike price of the contract. Opening price, this given the price at which a contract opened for the day. High price, this gives the high price at which contract was traded during the day. In real-time contract, it means highest price at the contract has been traded till that moment. Low price, this gives the lowest price at the which the contract had traded during the day. In a real-time contract, it means the lowest price at which contract has been traded till that moment. Closing price, this gives the price contract at the end of the day. And last traded price, this gives the price at the last contract they trade. In the real-time context, it reflects price at which last trade in the contract by the executor till that moment. Open interest for the future contract. Open interest equivalent to the open position in that future contract multiplied by last available closing price. For the option contract, open interest equivalent to the open position multiplied by the notational value. Notational value with the respect to the open contract is computed as the product of the open position in the option contract multiplied by the last available closing price of the underlying. Total trade quantity, this is the total number of contracts on which business took place during the day till that the moment. In case of real-time data, total trade value, the total money value, is the business which took place on the contract during the day till that moment. Real-time contracts, number of trade, the total number of trade which took place on the instrument during the day till that moment. Real-time contract information on trend, future and option market position. Positive trend, it gives information about the top gainer in the future market. Negative trend, it gives information top loser of future market. And future open interest gainer, it's those future whose percentage increase open interest among the highest of the day. Future interest loser, it lists those futures who decrease open interest in among the highest on the day. Active call, call with the high trading volume on that particular day. Active put with the higher trading volume on the particular day. Put call ratio, it gives the information about the ratio trading volume of the put option or call option. The ratio calculated either on the basis of option trading volume or on the basis of option interest. Introduction of investor risk reduction access platform. The investor risk reduction access platform is designed to protect investors from the technical glitch, unforeseen outrage that can make trading member sites inaccessible. It is intended to provide alternative when both primary trading platform and the disaster recovery site experience challenge. Silently feature of this platform outlined below. It is a joint platform developed by the exchange to provide investor an opportunity to square off close open position and cancel pending order in case of disruption. Trading service provided by trading member. IIRA service cell supported multiple segment across the multiple exchange. TM upon facing technical glitch which lead to the disruption of trading service can be requested to enablement of the IIR service as per the procedure specified by the stock exchange for the time to time. IIR shall be enabled to receipt of the such request. On the service of enable, all the investor of the TM shall be informed by the exchange of availability of the service through the email, SMS and public notice on the exchange website. TM shall also communicate the same by displaying on their website. Investor can IIR service to aspire of close open position and cancel of the pending order. IIR service shall not permit any action in case the risk of the investor. For the IRS service shall also provide the TM with access and admin terminal through the TM can monitor action of investor and also carry out of the action mentioned in the instruction of the investor. It's important to clarify that the IIR system exclusively individual investors does not cater of algorithmic trading or institutional client. Furthermore, its primary function to facilitate closure of position and cancel pending order, not the insert new position. Framework to the address technical glitch in a stockbroker electronic trading system. Silent feature of the SEBI circular are given below. Traditional information. Participation refer to SEBI circular. A stockbroker shall inform about the technical glitch to that a stock exchange immediately by not later than 1 hour for the time of occurrence of the glitch. A stockbroker shall submit preliminary incident report on the exchange within T+1 day to incident. T being the date of incident and report shall include the date at the time of incident, the details of the incident, effect of the incident, and the immediate action taken to rectify problem. A stockbroker shall submit root cause analysis report as per the format specified. Save of the technical glitch stock exchange within 14 days for date of the incident. RCA reports submitted by the stockbroker shall initially include time of the incident, causes of technical glitch, including root cause from vendor if applicable, duration, chronology, events, impact analysis, detailed corrective and preventive measures taken restoration of operation. Increased number of investors may create additional burden on the trading system of the stockbroker. Hence, adequate capacity planning to request for the stockbroker to provide continuously service of their client. In order to stream report process technical glitch across MMI and create centralized report technical glitch, SEBI has developed a web-based portal, integrated SEBI portal for technical glitch IPO iSpot for the submission of primarily final RCA report or technical glitch by the MIIS. Proactively, independently monitoring technical glitch shall be one of the approaches mitigation impacts such as glitch In this context, a stock exchange has the right to build API-based and logging and monitoring mechanism to be operated between the stock exchange and a specified stockbroker trading system. Under this mechanism, a specified stockbroker shall monitor key system functional parameters to ensure that the trading system functions in a smoother manner. Business continuity for interoperable segment of a stock exchange. The following has been decided by the SEBI for the interoperable segment for the stock exchange: cash market, equity market, derivative market, currency derivative, and interest rate. Common script derivative on the signal stock correlated indices, currency derivative segment, and interest rate derivative. Identical correlated trading products are available on the another trading venue. Participants can hedge their open position by taking offsetting position in identical or correlated indices on the other exchange. Further, as the segment and interoperable, taking offsetting position in other trading venue would net of such open position for inclined time. Real release the margin, hence no separate treatment is required for such category of product. Scripts exclusively listed on the exchange to ensure continuity. Exchange may create reserved contact script exclusively listed script on other exchange and signal a stock derivative not traded on their exchange and available on the other exchange to invoke it at the time of outrage on the other exchange. Index derivative product not having correlated index derivative product on the another exchange. Exchange which does not have highly correlated index derivative product with unavailable on the other exchange may consider creating such an index and introducing derivative contract on it and with extant regulatory provision. Therefore, SED would provide an avenue to hedge position in index derivative product of exchange that suffered an outrage. Intimation of SEBI and alternative trade venue. The effect exchange should be comply with extant regulatory requirements with regard to handling of technical glitch, outrage, and intimate about the invocation of the instant business continuity mechanism to the alternative trading venue (SEBI) within 75 minutes of the occurrence impact. Alternative trade venue should be invoked business continuously plan as per the standard operating procedure within the 50 minutes for the such intimation. NEC would act alternative trading venue BSE vice versa. Both exchange would prepare joint SOP that would include plan to invoke at the time of outrage and exchange along with the follow-up activity involving affected exchange and alternative trading venue role responsibility for each them. तो ये गाइस था जो कि ट्रेडिंग मैकेनिज्म के अंतर्गत। तो अब इसमें कुछ सिंपल बचा है। On the derivative exchange, all the order entered on the trading system are at price exclusively brokerage. True. A trader has bought 100 share XYZ and 780 rupees per share. He expected the price to go up but want to protect himself in price fall. He does not want to lose more than 1000 rupees on the long position. तो 10 रुपये नीचे करके आप रख दीजिए 770 का। देख सकते हैं स्टॉप लॉस। तो गाइस चैप्टर नंबर 6 अंत हो गया और हम नेक्स्ट लेक्चर में 7 से शुरुआत करेंगे। तो थैंक यू गाइस।